The economy is a major issue in the presidential race, and this morning, new concerns from the financial world. First Republic, a well-known regional bank, saw its stock drop nearly 50% yesterday after announcing a recent $100 billion drop.
The banking crisis in the United States of America is far from over. A month after the collapse of Silicon Valley and Signature Bank, another one, First Republic Bank, seems to be in trouble. The bank's shares sank over 20% on Monday. The drop in confidence came after the bank said its deposits plunged by over $100 billion in the first 3 months of 2023.
It has been a month since the failure of Silicon Valley Bank, which rocked the American banking industry. And now it seems another major US bank could be heading down the same road. First Republic, a major American bank with assets worth $213 billion by the end of 2022, of which about $167 billion were loans and $32 billion were securities, also collapsed. So what exactly happened with First Republic Bank, and why are US banks failing like pack of cards? Hello and welcome to our channel. Let's first understand the timeline on how things happened for First Republic Bank. On 31st December 2022, First Republic met all capital ratio requirements to be well capitalized. However, the bank had already borrowed $14 billion from the Federal Home Loan Bank Board. First alarm was heard on February 28, 2023, when bank published its annual report. The report noted that the bank experienced rapid migration of deposits to higher yielding products and asset classes due to rising interest rates. Just remember this point, rising interest rate, and we will come back to this point. On March 6th, FRB stock fell more than 75% within days and never recovered. Then US market was struck with failure of two other banks, which is SVB and Signature Bank. On April 24th, the bank indicated it was headed towards collapse as deposits declined almost 41% from December 2022 because there was a very high number of uninsured deposits. First Republic's wealthy customer base had a high proportion of uninsured deposits, with more than 67% of the bank's deposits being uninsured as of December 2022. So with all the bad news in market, investors made a panic run for their deposits withdrawal. This made the bank to go through liquidity crisis. Now the question arises, did FRB go to the same path as SVB, that is receivership, or was it able to gather lifeline in the form of funds? On May 1st, entered JP Morgan into the rescue along with FDIC.
JP Morgan Chase is taking over First Republic Bank following its seizure.
That's right. Federal regulators took control of the bank earlier today. For those keeping track at home, it's bank number 3 that has failed in the past 2 months.
JP Morgan paid $10.6 billion to the FDIC for the acquisition of First Republic. The FDIC was expected to provide $50 billion in fixed-rate financing for balance sheet restructuring as well as some loss coverage for mortgages and commercial loans. The FDIC's portion comes from the Deposit Insurance Fund, which is funded by quarterly fees that banks pays the FDIC to assess their risk. Under the deal announced on Monday, JP Morgan acquires substantially all of First Republic assets and agrees to assume responsibility for all of its deposits, including those above the federal insurance limit of $250,000 per account. JP Morgan is not assuming First Republic's corporate debt or preferred stock. Now let's answer why US banks are failing. To be precise, as of now, US regional banks are failing, which is pointing towards mismanagement of the bank rather than to any systematic global issue. Like SVB, First Republic blundered into trouble as the Federal Reserve began raising interest rates almost 14 months ago. It invested in long-term assets such as home mortgages and government securities when rates were low. These assets now earn the bank a return of about 3%, and banks are now paying about 5% to obtain fresh funds for its operations for the Fed and the Federal Home Loan Bank. Also, according to Dennis Keller of Better Markets, the failure of 3 regional banks in 7 weeks, Silicon Valley Bank, Signature Bank, and now First Republic, highlight regulators' failure to require mid-sized banks to develop adequate living wills or plans to wind down their operations in the event of a failure. He put onus on regulators to ensure that banks like First Republic and Silicon Valley Bank have living wills established that would enable them to be resolved in bankruptcy like any other company in America that fails, and they have not done their job. Now it seems, due to Fed actions of rising interest rates, poorly run banks are coming under scanner, and with PacWest Bancorp's recently tumbled 51% after it confirmed it was exploring strategic options, including a sale fuels fears a deeper bank crisis. Hope you liked this video, and for more such videos, do like, share, comment and subscribe to our YouTube channel.